Hey everyone, welcome back. Hope you guys are having a great Friday. It was a bloody Friday, unfortunately for us. Miners were down, Bitcoin was down, markets were down as well. Miners were down for like double digits for the most part. There were only like two that were actually in the green today, which was kind of surprising considering the day that we had. But we'll take a look at what happened there a little bit, and then we'll take a look at the miners here, kind of like a year-end review. So we'll go through all the miners in basically in alphabetical order, and just kind of point out some of the good things, some of the bad things that they did this year, and we'll just kind of go through it all. So chapters are going to be down below as always for you guys. And as always, you know, the drill here, which is, where am I at here? There it is. Not financial advice for entertainment only. Do your own research. I'm investing in following coins and companies for full disclosure. And if you enjoy this type of content, hit the like button, subscribe. Helps me out tremendously. And thank you so much for coming in to watch this. So let's take a look at what's going on here with, obviously, the miners and Bitcoin today. And we can see here that Bitcoin was actually down not that bad. I mean, Bitcoin was only down 1.22% on the day today. So it closed at 42,063. Miners, on the other hand, were way down. We are trending down lower. We are up a little bit here on the new day, which is basically in the Saturday. But if we look at the CME futures here for Bitcoin, we can see this gap that we have here, which is between the 39,000 mark and the 40,500 mark, roughly, somewhere around there. I'm still debating whether or not I think we might come down and fill this gap before everything is said and done. So it might be a tumultuous January for us here. Okay. So just something to keep in mind here. Other than that, I think if we fill that and start going back up, I think that would be actually a pretty good sign for us. But who knows? We'll see how things play out. Okay. Now, as far as the miners, so we had any was up just barely today. It was up 0.61% on the day. Argo was down 8.33% on the day. Bit Digital was down 16.9%. I mean, huge red candle heading down on today. Bitdeer was down 25.42%, basically wiped out any gains that it had over the beginning of at least the 3 days here that we had, which was Wednesday, Tuesday, and then Friday of last week. So, I mean, well, you could say maybe the gains that we had this week are pretty much wiped out here. Bitfarms was down 12.35%, also wiped out the last gains that we had here in the last 2 days of trading. Well, not counting yesterday. And then Cipher was down 14.14%. Same thing. A lot of the gains wiped out here. Cleanspark down 15.87%. Same thing. You can see just a huge red candle going down. Cores was down 16.66%. Digihost, another one that was only up today, was 5.05% up on the day. That was surprising as well. DMG was down 13.98%. Greenage was down 11.71%. Hive was down 15.17%. Hut 8 down 17.3%. Huge red candle there. Iris Energy down 16.28%. Marathon down 16.44%. Mawson down 11.11%. Riot down 12.10%, sorry. And then Soluna was down 5.88%. Stronghold down 25%. And Wolf was down 20.53%. I did do a little bit of shopping today. I did buy another 350 shares of Bitfarms today at $3.15, I believe. So I got into that one a little bit more. I'll probably buy in some more next week as well into Bitfarms, Cleanspark, and Iron if I can, depending where prices go. But that's kind of the plan here, is buy the dips and dollar cost average in until sometime later on in 2024, where we'll start maybe getting into the all-time highs for Bitcoin, things like that. That's when we're going to start looking into an exit strategy at that time. Okay. So overall, it was a bad day. So what really caused it? I think it was just the end of the trading year here. I think we had basically institutional investors basically locking in gains for the year. If they were invested in any of these miners here, which we can see a lot of them were down on the day, I think they were just locking in the gains to have a nice green year for them with huge gains potentially from the miners here. So we'll see if come January, if this continues going down further, or if we actually start getting a reversal here. But we'll have to see, obviously, where Bitcoin goes, okay? But that's kind of my thoughts on it. We'll see. It could be also, obviously, short sellers and options expiry as well, battling it out. So a couple of theories there as well. All right, so next, let's take a look at the miners here in general, year-end review a little bit. We still don't have the data for December, but I think we can pretty much guess that they're going to do pretty good in December because of the transaction fees in Bitcoin. But we'll go through Bitcoin really quick here as well, see where it started out the year last year at the end of December, where it's at right now, basically. Now we'll go through all the miners here. So I'm doing this off of memory here. My memory is not the greatest. So if I missed something for any of the miners as far as that you thought was important or anything else, let me know down in the comments below. and we'll discuss it there, obviously, and that way everybody can get access to it as well. Okay. So Bitcoin here. We'll start out with Bitcoin, as that's kind of the underlying asset, obviously, that everything is tracked against. So Bitcoin started out the year here at an average price of December of last year. At the end, it was at 16,949. That's the average price for Bitcoin in December of last year. Okay. And then the network hash rate on average was at 246 exahash at that point. Now, going out 12 months here roughly, we can see, well, let's take a look at Bitcoin here. Bitcoin on average here right now is currently at 42,586. That's the average. We still have a couple of days left in the month, but we're pretty close to that. Unless Bitcoin tanks really hard. I doubt this is going to change much, but maybe a little bit. But nonetheless, Bitcoin here has gone up approximately a little bit over 2x, basically, right? We're currently at 42,000 something on it. It was at 16,000. 2x would have been 32,000, so we're above the 2x. We're 2x something. The network hash rate was at 246. We are currently at December here, probably closer to 480, 490 exahash. So that in turn would be basically almost a 2x on the hash rate growth as well. So Bitcoin has outperformed the network hash rate, which is good because obviously that helps the miners out in the long run, right? As long as Bitcoin goes up more than the network hash rate, that does offset some of the losses that they would have had if it was just the network hash rate going up and the price of Bitcoin being flat, basically. Okay, so that's Bitcoin in a nutshell right there. So huge gains, not only in the hash rate, but also in the price appreciation as well. So that is how that worked out. Okay, let's take a look at our first one here. So Argo Blockchain. Argo currently has, well, at the end of Q3, they reported 58 million shares outstanding. Market cap right now, as of today, is 217 million. That's based on the price that we just talked about a little bit earlier ago. The performance over the last 12 weeks has been really good here. They're up 240% from 12 weeks ago with really no news on them, surprisingly, right? I think they were just being lifted up by all the other miners going up, Bitcoin price going up, Bitcoin transaction fees including in there. So I think that's the only reason that it really went up, because there's really no good news other than them getting a new CEO here. Now, looking at their current hash rate and future hash rate, that's basically flat right now. They're at 2.8. Future hash rate is going to be 2.8 as well. So they're currently fully operational. No real plans for growth going forward. I'm sure that they stated that they want to grow into it, but we'll see how well they can do that. Bitcoin HODL here. So you can see that their HODL was, it wasn't very high. It was at 141 Bitcoin in December of last year. I'm guessing it's going to be somewhere around the 20 mark here, as it is in November of this year. And that is obviously a concern there when their HODL continues to go down. That means that they are in financial trouble, meaning that they're selling more than they are mining, trying to stay afloat here, okay? Now, looking at their BTC production here, that has been up and over and under and over and all over the place, kind of. Best month was really in November of last year, and then May was the second best month here, which obviously had a lot of Bitcoin transaction fees in there as well. Bitcoin per exahash efficiency here, they've always averaged kind of towards the average mark of all the miners. They never really were the top one for efficiency there. Okay, and then you can see here how much they've been selling, and on this you can see the difference between what they actually generated and what they sold here, and they've been selling quite a bit, for the most part, a lot more than they've been obviously making here. Okay, going to hash rate here. So the hash rate growth this year was pretty abysmal. They started out the year at 2.5 exahash. They finally increased that when they received the Intel ASIC miners in July, August, and September of this year. That helped them up to get to another 300 petahash of that, and that got them to 2.8 exahash. So their growth has been, like I said, abysmal pretty much this year, and that's because they're financially strapped. So that was a concern there. They obviously sold also their facility to Galaxy Digital. Helios, I believe, was the name of the company, or the facility that they sold, to get out of debt, pay down some of the debts that they did have. So that was obviously, I would say that was obviously, in hindsight, that was probably good for them, but in the long run, excuse me, in the long run, it was probably bad for them. Okay, monthly Bitcoin revenue here has been up and down all over the place. May was their second best month here so far. And then obviously with the Bitcoin price going up in value, it has been increasing here. So that's kind of good there as well. Then you can see the monthly hash rate difference, BTC sold value, what they've been selling, last 4 quarters revenue. As also, this first one is a combination of Q3 and Q4. If you divide that by 2, basically you get about 10 million for that one. And it's going up through Q1 and Q2, and then for some reason in Q3 it actually went down, which I don't know if they curtailed more, possibly. And then the current quarter that we're in right now, ending in December here, we're estimating 13.71 million, which would be a nice little bump in for them as well. Excuse me. Now, as far as the operating costs here, minus depreciation, they were at about half of that, so you're looking at about 9 something. And it did come down, but went back up and then came back down. So that's good. They're trying to keep their costs down, which is a good thing there. Okay, custom 1 BTC minus depreciation plus credits are included in that as well. And that's showing to be about 11.74 thousand right now in Q3 for them. It was at a high here at 17.57 thousand per Bitcoin in Q2, which was definitely the highest point that they had here in the last couple of quarters. Bitcoin Mine quarterly, you can see here that their numbers have been dropping down. If you cut that in half, you had about 600 Bitcoin here for Q3 and Q4, maybe a little bit more in Q4. But overall, it's been coming down here. So that's not a good sign also going forward. Then when we look at the stock price right now and their value based on the numbers that we have for the last 12 months, which, well, actually the last 3 quarters plus the current month that we're in, and we're not including any HODL in that or anything, and we're not doing that for any of the miners here. We're just looking at strictly revenue on Bitcoin, and this is my estimates as far as what they should be valued. And I have them at PE of 5. PE 5 is basically no growth left for the company. All right, so that's kind of how I'm justifying it for some of the miners that are growing. They get a little bit higher PE ratio because they're going to be growing more into the halving event. After the halving event, possibly, they're going to get a little bit more for that. So having between $2.07 and $3.11, they're currently at $3.74. I think they're overvalued. We saw that obviously huge price appreciation over 200% in the last 12 weeks. I think investors got a little bit over exuberant on betting on the miners here a little bit. Okay, and when we look at their debt to equity, lower is better. I mean, I'm showing negative 29% for Q3 based on the numbers we have here, and then the current ratio at 0.59, so not good there. We can see that the total current assets was at 16.16 million at the end of Q3, and then 27 million was the debt, current liabilities in millions, 27 million. So not a good balance sheet there as well. All right. Coming down here to look at their miners really quick. You can see here that they have some older miners here a little bit that are still operating. I'm surprised that these are even still operating here. The Antminer T17 Pluses, those are 65 terahash miners. And they're still operating based on what they reported at. So I figured that 38 terahash miners would be out of there, so that makes sense there. But they still have 95 terahash miners here as well. They have about, what is that, about 10,900 of those. And then they got a bunch of these 100 terahash miners and 105 terahash miners as well. And those are the Intel A6 miners over here. Okay, so currently they're at 32 joules per terahash. Not a good sign going into the halving event. Based on this, they might be in a little bit of trouble, I think, okay, going into the halving event if they don't grow and improve their fleet going forward. Now, they also have a lot of these miners being hosted by Galaxy Digital now, which owns their facility that they bought from them. So they're also possibly paying a little bit more for that. But they fixed their debt a little bit here, okay? Last thing we're going to take a look at on all these miners here is just general and administrative compensation compared to the revenue. So for Q3, they were at 38%, which is, I believe, a little high. I'd like to see all the miners be below 20%, but there might be reasons for it. But they've been kind of floating around that range for a while here, 37, 40%. So that's kind of where we're at right now with them. And we've had a little bit of a dilution here, about 5 million shares or so roughly, between the H1 of 2023 and Q3 of 2023. So that's kind of what we got. So it's not too bad. Okay. So overall, for them, I think they just need to figure out a way to grow if they can. They don't have a lot of assets. Let's take a look at their cash balance sheet really quick at the end of Q3. We can look at that. Assets, cash and cash equivalents at the end, only 8 million. So not a lot of runway there for them. Okay. But overall, they need to grow as like anybody else, upgrade their fleet and hodl hodl as much as they can, but it doesn't seem like they can hodl that much anyways. Okay, so that's it for Argo. Let's get into the next one here, Bitdeer. And there we go, Bitdeer. So Bitdeer right now has 111 million shares outstanding. Stock price is $9.86. That gives them a market cap of about 1 billion or so and change. Their performance of the last 12 weeks is a little bit more reasonable here. From 12 weeks ago, they're up 30%. 8 weeks, they're up 156%. And then 4 weeks, they're up 104%. And then last week, they were up 29%. We'll see what the numbers look like when we do the numbers for the week in review this weekend here. But they're currently at 7.2 exahash, which is their self-mining part of things, right? They also have other lines of business, which is hosting and managed hosting. And they do their own thing where you can lease out machines. So this is only looking at that part of the business. It also doesn't include, doesn't include hosting. So that's just that part of it. But I think in general, they're like at 21 exahash or something like that, fully with hosting and everything else. Okay, now they're hodled. Doesn't look like they hodled anything. At least they don't report it. So I'm guessing that they sell everything. Their BTC production here has been increasing, which is good to see. But ever since September, it has been decreasing while we've seen other miners actually increase because of the network transaction fees and things like that, which for November, I would have thought they would have been up higher, but they weren't. So that was kind of concerning there a little bit because that makes me think that they were actually, what's the word I'm looking for here? Curtailing quite a bit. Okay. Let's take a look at their BTC per exahash efficiency. It has also not been the greatest for the most part. BTC sold, they sell everything. Hash rate, so you can see their hash rate did improve quite nicely here. We've had pretty slow growth in the beginning of the year. Going into, obviously, summer, that's when we got the nice bump in there from 3.8 exahash to 7.2, so that was good. That was a good move by them to get the machines at that point. We don't have data going back any further than that because they became public in, I believe it was right around February, March, something like that. Now, the revenue side of things here has been increasing, which is good to see. That's good. Now, Bitcoin has been going up, so that's why. That's good there. Hash rate, as far as how much they increase the hash rate month over month, and we only have really two red or green months, basically growth months here for them. Their sold value, okay, and then the last 4 quarters revenue, we only really have the latest 3 quarters here for them. And I probably should include the Q4 numbers for them because we, like I said, they came public in this year. Okay, so revenue is actually down from Q2 here to Q3. And that was mostly because of hosting and something else that was a part of that. While their own self-mining actually increased here, so that was a good part of that. Last 4 quarters operating costs minus depreciation, pretty flat here over the last 2 quarters, so that's good there. And then going down here, cost to mine 1 Bitcoin is at 16,000, down from 17,000, so that's good there. And then you can see the Bitcoin mined quarterly has been increasing as well, so that's good there. The debt to equity ratio lower is better, so that did come down here to 0.95, which is good. Current ratio higher is better. That has been coming down, but they're still at 6.4, so we want to be at least above 1. Total current assets still at 365 million, and then total current liabilities at 56 million, so really no worries there for them. Okay. Now, based on the numbers here, I have them at, for the last 3 quarters plus the current quarter that we're in, between $22.47 and $33.70. They're currently at $9.86. I think they are undervalued. There are some questions as far as their numbers are concerned when it comes to their financials. There were some things that I found that were kind of omitted. One of them was the cash balance sheet, and the other one was the shares. Basically, shares accounted for, how much they added shares and things like that. That whole table was missing there. So I think there might be some concern there by investors. Looking into them. I think they're a Singapore-based company. I don't believe they're China, but they might be Chinese. But I believe they're registered in Singapore. Correct me if I'm wrong on that one, but that's just going off my memory here. So I do think that they're undervalued, but there might be reasons for it, and the paperwork maybe is the reason for it. So if they can improve on the paperwork, get it timely out for the quarterly results and things like that, and provide all the information, that might be better, obviously, for the investors here. Now, as far as the miners that they do have here, based on what they reported when they went public, I estimated that they had these 93 on average terahash miners. And those were about 46,935 of those on average would be about 93. I don't know exactly which ones they have. Could not find the information, so that's kind of what we're using there. Now, they did provide it there, obviously getting newer miners here. So we got those 110 terahash miners here, which are good. The 93 obviously are a concern. And then when we look at their basically fleet, I have them at 32.5 joules per terahash, and this is just a best guess estimate, and it's also for all these miners here. So based on what I was able to find out, either looking up online what the miner was wattage-wise, or through their own press releases and things like that. Okay, so sometimes it's an estimated guess on it, but right now it does look pretty high on that for them as well. Going down here, when we look at general administrative compensation, they're at 19% here on the quarter, up a little bit from the prior quarter. Still not too bad. Like I said, I want to see the miners be below 20%. Ideally be below 15% if possible, right? Because that's still a heck of a lot of money here to be spending on that. Shares outstanding, didn't find any information on them on Q3 numbers. Like I said, some information was missing, so I think that might be the reason there. Might be a little bit of concern. And that is it for them. So for them, like I said, I think they're undervalued, but there might be reasons why for it. And overall, they just need to grow their own hash rate going into the halving event as much as possible and get more efficient miners as well. Okay, that is all I will say for them. Okay, next, Bit Digital here. So Bit Digital has 90.7 million shares outstanding. Stock price as of today was $4.23. Market cap at 383 million right now. The performance over the last 12 weeks has been really good also. 75 cents from 12 weeks ago, 68% from 8 weeks ago, 36% from 4 weeks ago, and 21% from last week. Their current hash rate is at 2.2. Their future hash rate is supposed to be at 2.5. They are also getting into the AI space. They did state just recently this week that their growth plans for 2024 are to double their size. So basically 5 or 6 exahash when everything is said and done. But we don't have any news as far as what that will be. BTC production here over the last basically 12 months, we're looking at a roller coaster ride, up and down, up and down. Their worst month was in April of this year. And then it has been increasing here through August, where we're down through October, and then a nice jump here in November. And then their HODL position is pretty good. 551 Bitcoin is not bad, valued at 23 million right now, so that's pretty good. And you can see their BTC HODL here has been also a roller coaster ride. They peaked in January of 971, and then they started going down through June, or May, June. And they started going back up here, and then they used some of that HODL to buy some miners, I believe. The AI service, I believe, that was used for that. Okay, monthly BTC mine Bitcoin month over month difference. BTC per exahash efficiency, they've been pretty good here for the most part. They did dip a little bit below in October, but other than that, they were pretty good. Okay, BTC sold, how much they've been selling each month, and for the most part, they've been selling less than they obviously are generating, which is good to see there as well. Now, their hash rate, they did have some older miners here that they were moving around and things like that, trying to get homes for them. So their hash rate was kind of up and down here throughout the beginning of basically this year. Then we started finally getting up on value to 1.7 in June, and then 2 exahash in August through October, and then a nice little jump here again into a 2.2 in November here. So slight growth there, not much really. If you look at from December, they were at 1.2 to 2.2, almost doubled it basically here. So that's not too bad. That's actually pretty good. For being a smaller miner, doubling it is actually not that bad, which is basically staying in line with the network hash rate, which we've seen double as well. Okay, Bitcoin mining revenue, nice increase here in November, 5.22 million, which was good. Otherwise, it was up and down here. The best month prior to that was July with 4 million. So as Bitcoin price goes up and they're mining more, that's obviously going to help them out going forward. Hash rate difference month over month. Also, last 4 quarters revenue, you can see that that has been increasing here quarter over quarter, which is good. And then the current quarter that we're in, estimated we're looking to be even better than that. So that's looking good there. Operating costs have been below 14 million for the last 4 quarters roughly. So that's good there. And then their custom mine 1 BTC minus depreciation has been increasing here. And that's mainly because they do host all their machines for the most part. Excuse me, I need to take a sip of water. Okay, apologies on that. Bitcoin mine quarterly has been coming down, but then it's up again in Q3, so that's good. And then we saw that basically reflect what their hash rate was. Okay. So with them, lower debt to equity ratio, it's been up and down also, but it's down to 0.05, which is really good. Current ratio is really high as well, 29 right now, so that's really good there. You can see the total current assets at 66 million, and then their total current liabilities at 2.2 million, so that's really good there as well. Now, my estimates for them were $2.31 to $3.47. They're at $4.23. I think they are overvalued. But I think based on the information that they provided with the AI servers that they're getting, and the customer that they have for them, they're supposed to be getting 35 million basically a year for a 3-year contract with that customer. So that's going to be a huge boom for them. So it's basically consistent 35 million minus electricity and things like that. So it should be really profitable for them. The only thing is they had to spend, I calculated around 20 some odd million for those servers. So the first year is going to be a little bit less profitable than going forward. But it's still a good, really good nonetheless. Okay. Let's go down here. As far as the miners are concerned, their miners are not too bad. And here's what we have for them. They have some of these 88 terahash miners, which I think they're going to be probably getting rid of if they haven't already. Then they have the 100 terahash miners here, 103 terahash, 120 terahash miners, and that gets us to the 22 joules per terahash on average, if my math's right. Yeah, I'm not even including those 80 terahash miners there, I believe. Yep, those are gone. And then we're, See, I just noticed a mistake here. Sometimes you just need to look at it all. Okay, there we go. So that gets us to 28. Okay, so 28 is still not bad. We want the miners to be below 30, so that's really good there. Ideally closer to like 25 and less would be like the ideal mark on them. Okay, so that's kind of what we're looking at for them. And then looking at their general administrative compensation here, has been kind of high though. So their general administrative compensation is at 42% here, which is pretty high, but it has been coming down over the last couple of quarters, which is good. So we still want, obviously, we need revenue to go up in order for that number to come down, or their general administrative compensation to come down. Okay, and then as far as their shares here, dilution looks like they diluted about 5 million shares or so from the prior quarter to the Q3 numbers, so not too bad there either. So overall for them, the big thing for them obviously is the cost to mine one Bitcoin, right? They're hosting with hosting partners, so that's going to be high, and then just continuing to grow. And then we'll see how the AI stuff is also for them, how profitable that is going forward. That might be a good boom for them. So that might be the reason why the stock is up higher, and we'll just have to see, right? I'm just basing this on their self-mining, doesn't include anything else, doesn't include their HODL or anything like that. It definitely doesn't include AI right now, okay? So we'll get this obviously updated once we get more data on all this stuff. Okay, next, Bitfarms here. So Bitfarms has 322 million shares outstanding, stock price at 291, market cap 937 million. It was over $1 billion, I believe, just yesterday, but everything tanked today. So performance over the last 12 weeks has been really good here. I'm not going to go over it. You guys can take a look at that right there. Current hash rate at 6.4. They're supposed to get to 12 exahash that they purchased. They do have the option to buy more to get to 17 exahash, possibly sometime next year or the following year in 2025, I think. Okay, so they're 53% operational right now. They still have about 86% growth left, so that's really good there. Their BTC production has been coming down and kind of going up a little bit here, which isn't too bad. Their HODL is also not bad, 802, valued at 34 million right now. And you can see that their BTC HODL has been increasing here. And you can see that it dipped back in November of last year to December. They sold quite a bit to pay down quite a bit of debt also. So the year prior in 2022, they were in a little bit of a debt crunch, but they, magnificently got out of it over the last basically year and a half from where we were in 2022 and like June, July timeframe. They had a lot more HODL at that point, but they had to start selling it in order to pay down the debt and everything else. Bitcoin was coming down at that point as well, and it just wasn't a good year for the miners. BTC per exahash efficiency, always like in the top 5 or so miners for efficiency, so that's really good there. You can see how much they've been selling here for the most part. Hash rate has continued to increase here. They went up about 50% on hash rate growth this year from the 4.5 that they had to the 6.4, almost 6.5 if you want to look at that. So almost 50% growth there. Would have liked to see them grow a little bit more than that. The revenue here on the side of things has been increasing as well, kind of a roller coaster as well, up and down, but it is now peaking in November for 14.3 million in revenue, whereas last year they were at only 7.9. So that's basically almost a double in revenue here. So that's good there. Hash rate difference month over month, BTC sold value, last 4 quarters revenue. They had a little bit of a dip in Q3 for some reason, but overall it's been growing here. Now we're currently estimating about 39.9 million, but I think that's going to increase based on the transaction fees for them and for everybody else probably, because of the transaction fees in December as well were pretty high. Last 4 quarters operating costs, pretty consistent here for the most part, right around 30 million here, except for Q1 was a little bit lower. And then cost to mine one Bitcoin mine's depreciation was at 17.4. Bitcoin mine quarterly has been coming down, and that's mainly because, like I said, they weren't growing as fast as the network hash rate, right? So if the hash rate doubles, you need to basically double your hash rate as well in that year. Debt to equity, lower is better. They're at 0.15, so that's good there. Current ratio has been increasing as well, so their balance sheet is getting healthier as well, so that's good. Total current assets, 83 million, and then total current liabilities, 29 million, so that's looking good there. And based on the last 3 quarters plus the current quarter that we're in, which is estimated number, I'm in between $4.35 to $6.52, and that's mainly because they are going to be growing quite nicely here in 2024. They're currently at $2.91, so definitely undervalued in my opinion on that. Okay. As far as miners are concerned, they do have a lot of these older miners here as well. These 103 terahash miners, which I believe they said they're going to try and get rid of some of these older ones here, especially I'm guessing the 80, 90, 91 terahash miners. Those are going to be getting out of there. And then they have been buying some of these newer miners here, like these Hydro BTs, which are like What are those things at? 352 exahash, but those are Hydro. So those are up there. And then these Antminer T21s also 190 terahash. So overall, based on all this, let me see if I have everything. Nope, I don't have everything. So we'll add that in there as well. And they're right now at 30.1 joules per terahash. And does that include everything in here? Nope. I always got to add stuff. See, that's why I have all this data, but then I have to make sure that I add it all together. And then what do we got here? Yep. So they're going to be at 30.1 joules per terahash. So I think they are going to be getting rid of some of these older miners here, which are these 8090s, and then these 103 terahash miners as well, some of these older ones possibly going forward. So still need to do some work on that, getting them lower below the 30 mark here. And let me make sure that we have everything correctly accounted for. Well, we don't have these accounted for. 36 there. That is all accounted for. Yep. That. Okay. Oh, we're counting all of these in here as well, which we probably shouldn't be. Because, well, I'll leave it as it is for right now, but they got to improve that on that number as well. Okay. Going down here to general administrative, you see that they are at 24% right now, which has been coming down also, which is good to see. Like I said, I want to see that below 20. And then their share dilution hasn't been too bad, 7% from the prior quarter. And then we had 7.4, 7.16, 3.94 differences in dilution. So it's not too bad there. But yeah, this is driving me nuts now, knowing that this is going to possibly be off. All right, I'll fix this. I'll get this over to my Patreon members. I'll get the updated version of this, and I'll make myself a note that I need to do this. Okay. Going down. Okay, I think that's it pretty much for them. The good thing is that they are going to be growing to, like I said, to the 12 exahash, which is basically a double over the next year sometime. And that will be definitely beneficial to them. They do have a pretty nice hodl right now. They are continuing to grow. They pay down their debts, which is good. So they're going to have a healthy balance sheet going into the halving event. Overall, no really qualms from them. If they can get to 17 exahash, that would be even better. But yeah, right now, I just think they still are undervalued at this point. Okay. So that's it for Bitfarms. Let's take a look at Cipher here really quick. Cipher, 254 million shares, stock at $4.13, market cap 1 billion right now. And the performance over the last 12 weeks has been kind of up and down a little bit. You can see that on their chart. Their current hash rate is at 6.2. And their future hash rate is going to be about 15.6, but that is not until possibly sometime in 2025. All right, so that's not going to happen until then. They do have the option to buy like 8 exahash, I think. And I should have probably clipped this release on that, but it's like they have the option to buy 8 in 2024 if they can build out their infrastructure in time. I think that's the case. Okay. So that would obviously offset that, and then they could probably go even higher than that in 2025 as well. Hodl position 558, so pretty good value there as well, 23 million. And you can see the BTC production has been increasing here ever since last year. They peaked in May, then dipped in June for some reason, quite a bit here. And then after that, they've been kind of up and down, but have been going up slowly here. So that's good there as well. Looking at their BTC hodl, you can see how that's been growing as well. BTC per X efficiency, not probably like the average miner here that we track. Not the best, not the worst, but kind of in the middle for that. So that's fine there. And then you can see their hash rate growth. And that is has been improving here, but they've been kind of flat here over the last couple of months here. Okay, they're at 7.2 right now based on what they reported. And then the revenue here has been increasing through May. And then they had a little bit of a roller coaster ride after that. But it did start improving after August, where it's been going up month after month on that one. Looking down here, let's see what else we have here. Bitcoin sold value, how much they were selling. So they've been selling less. Last 4 quarters revenue plus the current quarter, they've been going up except for Q3, which was down from Q2. But this quarter, we're estimating to be about 41 million. So that's pretty good growth there. Last 4 quarters operating costs has been increasing through Q2, but then we went down a little bit here in Q3. So that's good. Obviously, that's based on them getting more miners installed. So that's going to cost a little bit more. And looking at their cost to mine 1 Bitcoin minus depreciation was at 10.9 thousand, which was really low. Based on the numbers that we're seeing here for them. So that's really good there. Bitcoin mine quarterly has been increasing except for Q3. For some reason, it was down a little bit here. And then their debt to equity ratio is pretty good here at 0.2. And then their current ratio is at 1.3. So at least they're above 1, which is good there. Now, I have in between $4.90 and $7.35, and they're at $4.13. I believe that they're undervalued right now based on what they do have, but that all depends on how well they can execute going forward on this, right? Their growth is at P20, but like I said, that's not possibly until 2025 sometime, or if they're able to build out the infrastructure that they need, they might be able to get miners in 2024. So big question mark there for me at least. Okay, total current assets has been increasing. Total current liabilities at 38 million, so that's good there. Miners, they do have some older miners here that are 88 terahash miners here as well. I believe we're calculating all of those. Yep. So that's what's going to get them to it all. And if they get everything installed here that they're supposed to get, let me see here, 10.4.23, they reported they're getting S21 miners, 1.2 exahash of those. And then the 7 ENT miners, T21s, delivered H1, so first half of 2025 sometime in there. That would get them down to a joules per terahash rating of 24.51, which would be actually pretty good there on that one. Okay, let's go down here to the general administrative part of things. This is where it gets a little higher. So they had revenue of 30 million in Q3. General administrative compensation was at 23.8 million. That's 78% of that. That's way too high. Don't like seeing that, right? It's been pretty high here for the last 3 quarters. So, and it seems like it's been actually growing their compensation here. So 17 million, 21 million, 23 million. All right. Like to see that go the opposite way, or at least the revenue go way up. So that is offset by that. But that also probably includes share-based compensation, all that fun stuff in there as well. Okay. So that is it for them. The big thing is obviously to grow, get rid of some of these older miners so that they do have these 88 terahash miners, because they will probably not be profitable come sometime after the halving event, depending where Bitcoin goes, and just continue to grow. And they do have, let's see, how many do they have of those? They have approximately 720 petahash of those, so almost 3/4 of an exahash on that one. That would like to see those get changed out as well. Okay, big thing for them is obviously to grow, build out the infrastructure, get the hash rate up and running as fast as they can, not in 2025, but in 2024 if they can. Ideally before the halving event, if not a couple months after the halving event, that would be ideal. But that's basically it. No really qualms here for Cipher from me on that one. Okay, next, Cleanspark here. Cleanspark has 184 million shares outstanding. Is that the most recent number? Let me see here. Q4, yeah, that should be the latest number here. 184, yep. Okay, so 184 million shares. Want to double check that. $11 and change for the stock price. Market cap of $2 billion right now. And the performance here over the last 12 weeks has been really good overall. Then when we look at their current HODL, 2,575 Bitcoin, valued 109 million right now. That's a nice chunk of change there for them. So that's good there. Current HODL, or current hash rate is at 10 exahash. Future hash rate is supposed to be 20.6 exahash. And they're trying to get to that by the end of June of 2024. They're supposed to get to 16 exahash sometime in Q1 of next year, so 2024. And then the rest will get added in after that sometime. Okay, let me see what else do I have here. BTC production here, their best month was in January of last year, 697. And then they've been kind of, excuse me, floating around above the 600 mark here over the last couple months, November. December, we'll have to see how that one comes in. I would imagine it might be a little bit higher than that. We've had, obviously, the Bitcoin transaction fees and everything else, but we'll see. On that one, BTC HODL, you can see that that has been growing quite nicely here. The nice thing, or at least to me was the nice thing with Cleanspark, was that they were using what they mined, a lot of it, to fund growth in 2022 and now in 2023 as well. Okay. BTC per exahash efficiency, always within like the top 5 or so miners here as far as efficiency, so that's always good there. BTC sold, you can see how much they were selling. So for July, August, and September, they were selling very little to increase their HODL position before that event, which I think was actually a pretty good move on their part. Hash rate, excuse me. They started out 5.5 exahash, almost doubled it here. Well, they were in December 6.2, so they almost doubled it. Well, from November to November we go, they almost doubled it, but from December we'll have to find out where they are in the end of December. I'm guessing they're going to be still at 10 exahash on that one. But that's where we have them at. So almost doubled it, almost stayed with the network hash rate, which is good. Their monthly revenue here has been a roller coaster ride as well. And we can see here that they had a nice revenue on November, which was 24 million. A lot of it was, not a lot of it, a portion of it was contributable to the BTC transaction fees as well. Hash rate growth, you can see that they had a lot of months here where they were growing, a couple months where they weren't growing, but overall growing forward. So that's good. Now, Last 4 quarters revenue has been increasing here quarter over quarter, which is good. And you can see we have an estimated 64 million for the current quarter, which is nice. And excuse me, I got to take a drink of water. My throat's starting to come in. Okay. Last 4 quarters operating costs, for whatever reason, in Q4, they dumped a bunch of stuff in there. There were non-cash expenses, excuse me, ending up 55.93 million. So hopefully that was their year end also. So a lot of companies do that where they toss a bunch of stuff into it at the end of the year. Cost to mine 1 Bitcoin minus depreciation was at 16.2, has been increasing, which kind of what we were seeing here across the board for the most part. Bitcoin mine quarterly has been kind of up and down here. In Q3, they were down a little bit here and then back up here in Q4 with 1,177. So that's good there. Debt to equity ratio is still really good at 0.12. Current ratio is at 1.37, which is still good above 1, which is where we want them. And then their current assets here is 102 million. It's a nice increase there. Total current liabilities of 74 million. So that's why we have that ratio there. They did buy quite a few miners here in Q4, which was our Q3, their Q4. Okay. Right now, I have them between $11.11 and $16.66 based on the last 3 quarters, plus the current quarter that we're in right now. So they are undervalued, in my opinion, just a little bit, slightly, right? Somewhere around probably $12, $13 would be a pretty fair value, I think, for them going forward. And then obviously if Bitcoin goes up, everything changes for all these miners as well. All right, now as far as their fleet here is concerned, they did have some of these 95 terahash miners, which they said that they were going to be changing out. So I got those rid of in October. And they have 100 terahash miners as well, and some 98s, 96. I believe those have been changed out. They did say that they're going to be swapping those out as the newer miners come in. And then we obviously have quite a few miners here that are going to be the newer generation S21s at the 200 terahash mark. So based on all this, I do have everything here accounted for except for the ones that are being removed. Excuse me. That gets us to 23.19 joules per terahash if that all happens. Okay. Now looking at their, well, this is way down here. Compensation, general administrative expenses was at 20.8 million here. Plus, okay, so that's 12.36. If we include payroll in that, it's 39%, 0.51. Payroll, I don't know if that also includes, excuse me. I'm guessing that includes everything. So that's still pretty high to me, at 39%. I'd like to see that be below 20%, right? Because that's quite a bit here. If you just look at general administrative expenses down here, let's see, revenues, professional fees, general administrative, they pointed out at 20. Payroll expenses, 45 million here. Oh, I'm using the end of year. I should be using Q4 numbers for it. What are we looking at here? Let's see here, 44, 23. Do we have the right data here? Let's see here, Q4. 15. Okay, so we're using payroll expenses plus the general administrative. Okay, so that's good there. And then this over here, general administrative was J78. That's good there. And then we're just taking that percentage from the revenue. Okay, so that's 14.6 if you don't include payroll. If you include payroll in that, you're looking at 44%. So again, still not good. And why was the payroll so much higher than this time around? Let's take a look at that. Sorry about the scrolling here really quick. When I get to it here, liabilities, where was it? Where was it? Down here? Payroll, 15 million. That seems quite a bit here. A huge jump, 5 million in payroll. I'm guessing that's going to be, I'm guessing it's bonuses probably. They paid out a lot of bonuses here in Q4 for employees. Because if you look at it here, it was closer to 9, 9.8, 9.7, 10, and then a huge jump in here. And we saw the same thing here happen in Q4 of last year. Right, 13 million where they had 7.6 million only in Q3. So definitely a lot of bonuses, I think, were being added in there as well. Okay, so that kind of solves that a little bit. At least we know what's going on, but still really high. Don't like seeing that. That's the only big thing I have about Cleanspark is the general administrative compensation part of things, and I'll just leave it at that. But the good thing is that they are growing to 20 exahash. They have 16 exahash funded for already, and then the 4 additional exahash, they're going to have to probably spend a little bit of money, which I think they have enough to cover building out infrastructure or something like that. Okay, so that's it for them. Good growth going forward. I really don't have any qualms other than the compensation part of things. We'd like to see that below 20. And that's it. We'll leave it at that one. Okay, Core Scientific is next here. As you know, Core Scientific is in bankruptcy right now. They are going to be getting out of it sometime in January here. So they have 386 million shares outstanding as of right now. Stock price is $1.45. Their market cap is at 560 million roughly. And they've had a huge run up here in the last 12 weeks, which you can look at. Their BTC production has been coming down. The HODL, they don't have any HODL, but their BTC production peaked in January of last year, and it's been going down basically ever since then, except for November, which had the Bitcoin transaction fees added into it, which was at 954. So we'll see if December they can beat that number there. BTC per exahash efficiency, kind of again in the middle there of the miners, not the best, not the worst, kind of in the middle. BTC sold, they've been selling everything they had. Hash rate, they peaked at 17 exahash last year, and ever since then they were coming down in February, March, April, and mainly I think because they were selling miners just to try to get out of debt, basically pay down some of the debt that they did have. And then slowly it started either getting miners back in or something like that, but they slowly got back to 15.2, or they were putting the average numbers they were running on. It's hard to tell, but the revenue here has been increasing through pretty much May of this year. Then it was coming back down. I think towards the summer months they were curtailing a little bit more, and then back in November they were back up to 34, which still isn't their best, which was in May of this year. So we'll see if January can beat that, or not January, December, sorry. Revenue here has been up and down. They peaked in Q1 of 2023, then they've been coming down here ever since then. The current quarter we're in, I'm estimating about 94 million. We'll see if that happens. And then the last 4 quarters operating costs have been coming down, which is good to see, obviously, because they're in bankruptcy. They want to be as lean as possible. And their cost to mine 1 Bitcoin mine's depreciation is pretty high. 24.59 thousand per Bitcoin right now is what I'm calculating here, depending on what they throw in there. Bitcoin mine quarterly has been coming down as well, and that's mainly because the hash rate, right? If you see the hash rate, it's not really growing, it's stagnant, it's been coming down. That's the reason for it. Debt to equity, negative 2.4, that's not good. Current ratio, 0.43, still not good. And then total current assets, 134 million. Total current liabilities, 312 million. That's obviously a concern there for them. And then if they weren't in Chapter 11 bankruptcy, I would say that they would be valued between $4.83 and $7.25. They're at $1.45, but there's a reason for it. They are in bankruptcy, so that's the reason why. Okay, as far as miners are concerned, what they have here, they do have some older miners as well. We got some 98 and then some 102, 100 terahash miners in there as well. Their efficiency is about 30.8. They do have a deal with Bitmain to buy 4 or 5 exahash. I can't remember exactly. As part of the restructuring deal with them, they're going to pay some of it in cash, some of it in shares, and they're supposed to get that after they get out of Chapter 11 bankruptcy on that one. Okay, going down here, general administrative compensation here has been actually pretty good for them. They're reporting 20.82% based on revenue of 112 million. That's also including their hosting that they have in there as well, which I believe is not subdivided into portions there. Profit, sales, margin, sales, cost, expenses, hosting services. Yeah. So then we're looking at, let me see here, operating research and development, general administrative. Yeah, they don't break it down. So I believe that's everything included in there for it as well. So the big thing with them is obviously the bankruptcy has kept them down. Once they get out of it, I think it's going to be a good thing for them. We'll see where the number of shares end up for that. And them just trying to grow again is going to be important for them going forward. And then depending how long it takes them to pay off the debt that they have, because they still have quite a bit of debt, obviously, to pay off. What else do I want to state here? I think that is it. The other thing was with them, hosting was a big cash burner, basically. They were not profitable on it for a while. If we look at it here on revenue side of things, you can see here that they were actually negative profit margin hosting, right? Negative for a couple of quarters here. 4 quarters in a row where they were negative profit margins on it. That's what really did them in last year. Right? They were making it up by sales of machines, but man, when Bitcoin started tanking, that really offset them. They just didn't have the right profit margins in place for hosting. So that was a big thing for them at that point. Hopefully they learned their lesson from it. Okay, but otherwise, definitely high risk, high reward on this one. So do your research on it as well. Next, one of the couple of smaller mines that we do have here, Digihost. They currently have 28 million shares outstanding. Stock price of 229. They're valued at 65 million. Performance over the last 12 weeks has been pretty good for them. Their BTC production, or their current hash rate, is at 1 exahash. Future hash rate at 1 right now. Not a lot of growth planned there. They do have the capacity to get to about 2 exahash, I think, in 2024, but we don't have any news as far as them buying miners or anything like that. HODL position is pretty small, 19.28. BTC production has been kind of up and down. It has been increasing here through September, October, and then for some reason in November they were down to 77. I think I know why. They were including in September, October numbers, or some of the months, the BTC equivalents that they were getting for power curtailment hosting that they do also. That offset my numbers here, that's why. Looking at their HODL, you can see that they had 111 in January of last year, or this year actually, and then they sold a bunch and they've been kind of like 13, 19 BTC for the majority of the year here. BTC per access efficiency, you can see here that they peaked at 86 here, which is incorrect. There's no way that they had that high of efficiency. So they're including BTC equivalents in there as well. That's what's messed up my numbers here for them for a couple months. Let's take a look down here. BTC sold, you can see how much they sold here. Hash rate has been pretty small and very small growth. So they started out the year at 650 petahash. They ended up at 1.1 exahash roughly. Almost a double. I'd say, what is that, 80% growth or something like that. In at 80, 90%, something like that. Their Bitcoin mined revenue here has been increasing going forward, which is good to see. That was good. Hash rate difference, BTC sold value, last 4 quarters revenue, up and down here. We're estimating about 7.29 here for them. Costs have been coming up ever since Q1 as well to 5.1 million. Their cost to mine Bitcoin here also increasing as well. Bitcoin mine quarterly has been increasing as well, so that's good there. Debt to equity 2.8 right now, 0.28 right now, so that's good. Current ratio at 0.59, that's good there. Total current assets 3.36 million. Total current liabilities at 5.6 million, so that's a little imbalance there as well. We'd like to see that higher. Yeah, so 0.59 isn't good. We want to see that going up, down. My mistake on that one. Looking at their numbers here, I have them between $1.72, $2.58. They're at $2.29. I think they're pretty fairly valued right now as it is. And then looking at some of their miners here, they do have some of these 90 terahash miners, 76 terahash miners as well. I would like to see those getting rid of. And then they only have 102 terahash miners after that. They have some 110 terahash miners here as well. So their fleet efficiency right now is at 39. And make sure we're counting all that same stuff. And we are. So that's good. So 29 isn't too bad. They're under 30. We'd like to see that below 25 if possible. And then looking at their general administrative compensation here at 23.68. That has been increasing here, which is not a good sign. That's what I like to see. And yeah, I think that's it. Overall, they just need to grow, really. I mean, being at 1 exahash right now, going to having an event, they're going to be generating half the revenue here, and they're not really growing into it. They're going to be possibly in a world of hurt unless they actually really do grow. So that is it for that one. Let me know what you guys think. Next is DMG here. DMG has 167 million shares outstanding, stock price of 46 cents, market cap 77 million right now. Performance over the last 12 weeks has been pretty good here for them as well. Their HODL position is 429 Bitcoin. This was last reported. When was that last reported? 429, I guess in November 23. So that's what we have right now. That has been coming down here since May. The BTC production has been a roller coaster ride also, but it has been increasing ever since July, which is good to see. BTC per exahash efficiency. Not very efficient here as far as that is concerned. BTC sold, how much they sold, hash rate, and you can see that their hash rate was pretty much stuck at 917 petahash all year for the most part, except once we got into September, which was 1.2. But the revenue has also been a roller coaster ride, and it has increased here towards November, which is good to see also. That's kind of good there. Let's see here. Last 4 quarters revenue, up and down here for the most part, down in Q4 to 4.1 million, and then we're estimating 6.4 million here in the current quarter. Their operating costs have been coming down, which is also good to see. Cost to mine 1 Bitcoin has been increasing as well, like we've seen with other miners. Bitcoin mine quarterly has been decreasing, right? Because their hash rate has been pretty much flat all year. So you're going to see that happening as well. That's why I keep saying miners need to grow. Debt to equity, lower is better. They're at 0.07, so that's great there. Current ratio, higher is better. They're at 4.57. They're above 1, so that's good there. Total current assets is 19.2 million. Total current liabilities of 4.2 million. Not a problem there for them. I have them right now between 33 cents and 49 cents. They're at 46 cents. I think they're pretty fairly valued right now as it is. Okay, sorry, I had to take a sip of water. I've been talking too long. My throat's going to be killing me later on. As far as their mining fleet here is concerned, they have 100 terahash miners for the most part. They have also some newer miners, the 140 terahash miners, which are the XPs. And then some of the 100 terahash miners, 123 terahash miners, and then the T21s, which they're supposed to be getting sometime, we don't know when. But that will get them to 2 exahash, actually. So that is good news there that they will be growing. doubling their size basically next year sometime. And that is based on, let me see if we're using all the numbers here for it. We are, and we are. So that gets them to 23.91 joules per terahash, which would be actually pretty good on that side of things. Now, general administrative compensation, 19.1%. Perfect. Love to see that below 20. This is what we're seeing here. It was at 25 in Q4, which they probably put in bonuses in there, like others have done. And then other than that, it's been below 20. So overall, pretty good there. Big thing for them is really to grow if they can going forward. Being at 1.2, getting to 2 exahash would be actually a pretty good thing for them. It'd be almost a double there. So for a small miner, they're doing pretty good, I think. Good, healthy balance sheet. Everything else, other than that, like I said, just grow. They got to grow. Okay, next is going to be Hive. So Hive Blockchain right now has, or it should be Hive Digital. I should change that. They changed their name. So while I'm thinking about it, let's change that to Digital. Okay, Hive Digital, they have 86 million shares outstanding, stock price of $4.53. Their market cap is at $390 or $390 million. Sorry, I'm talking too long. Performance over this for the stock over the last 12 weeks has been okay. Their current hash rate 4.1, almost 4.2. Future hash rate 6.9. They did state that they want to buy more miners and grow in 2024. We'll have to see what they actually get for it. So they still have some pretty good growth, about 50% growth, at least right now, on what they have. HODL position is pretty good also, 1,627 Bitcoin. That's valued at 69 million right now. BTC production, as you can see here, has been kind of up and down all over the place. BTC HODL has been decreasing, all right? So they've been using that HODL position to buy miners, and they've been swapping out some of the older miners that they had, because they did have some old miners there, which was good. They also were mining Ethereum in 2022, but that changed over to proof of stake, and that really hurt them going forward here. So they're trying to catch up a little bit here. You can see their BTC per exahash efficiency has been coming down, but they're still one of the most efficient miners that we track here, usually within like top 2, top 3 all the time. So that's always good for them. BTC sold, you can see how much they've sold here each month. Their hash rate has been increasing ever since December of last year, which was good. November, I think also, they get rid of some older miners there as well, but they've been growing here. But they basically doubled their hash rate, which is pretty good for a smaller miner here. So they were at 2 exahash, they got up to almost 4.2 exahash, which was good also. And then you can see here that their revenue here has been improving as well, kind of flat here over the last couple of months, but then a big jump in November, which included the BTC transaction fees for them. Hash rate growth month over month, so we saw some down months here for them. And then other than that, we've seen pretty much every month they were growing at least a little bit here, so that's good there. How much they sold, their revenue here has been increasing as well. We had a little bit of a dip in Q2, and then current quarter we're looking at 27 million, which would be a nice increase for them as well. And then the operating costs have been also increasing quite a bit here, from 13.9 to 21, and I think that might be with the growth of also their hash rate, considering things. Looking at their cost of one Bitcoin is at 21.8 thousand right now, based on the numbers we do have for them. BTC mined quarterly, up and down a little bit here. It has been down from the prior quarter. Debt to equity is at 0.38, so that's pretty good. And then their current ratio is at 2.5, so they're above 1, so that's good. Their current assets, 63 million, 64 million roughly. Total current liabilities, 25 million. Healthy balance sheet there. I haven't really at $5.27 to $7.91 for the last 3 quarters in the current quarter that we're in, estimated. They're currently at $4.53, so they are undervalued in my opinion. And they could possibly even fetch a higher PE ratio. They are also trying to get, I believe they bought facilities out this year, which was good. They're also trying to get into the AI space with the GPUs that they had. They're also buying newer GPUs as well, to speed up that AI infrastructure they're building out. So that should be more. They're saying it's supposed to be more profitable next year. So we'll have to see those numbers before we can actually possibly include those in here, one way or another. Okay, and the same goes for anybody here that's getting into the AI space. Now, looking at some of the miners here, you can see here that they have some older miners here. Well, quite a bit. And I believe I'm not including those in the final numbers that we do have here, but 79 terahash miners, 74 terahash miners. We have some 98, 96 terahash miners, and then they have some newer ones that are 100, 140, 104, 120, 136, and then 200 ones as well. So I believe we are looking at all the numbers that we're supposed to be, and then subtracting some of the older ones that I think are going to be taken out, which they said that they're going to be basically upgrading their fleet. So that means you're going to be getting rid of some of the older miners as well. And we do have some miners here as well, and that gets us to about 26 if they can get it all done. 26 joules per terahash, which wouldn't be too bad. That would be actually pretty good. Going down here, general administrative compensation, we're looking at 33%. So pretty big spike here from Q1 to Q2. Not sure what that was. Q4 last year was pretty high also. Excuse me, 34%. Then we had 40%. Like to see that down a little bit lower there. Not sure what's going on there, but that's probably one of the qualms that I have here for them. And then obviously the growth, right? We really want to see them grow more than they are. So I did own Hive Digital from 2017, 2018, all the way through the bull run in 2021. I thought Bitcoin was going to be going up higher. Didn't go up higher, so I followed it down basically, and then I sold it a couple weeks ago and moved it over into other miners, which I thought were growing faster. So I did own it for a long time, and mainly because of their efficiencies. So, but the lack of growth, unfortunately, is what made me switch over. But other than that, the big thing is for them to grow. Very efficient binary company, so no qualms there. Pretty good HODL position as well. And they said they're going to be also increasing their HODL going forward until having events. So I think they said they're going to HODL everything. So that'll be interesting to see how much they can grow their HODL at that point. Next here, Hot 8. Okay, so Hot 8 is an interesting one because Hot 8 had a very, very tough year in 2022 and 2023 with facilities being down, disputes with energy providers and lease tenants, or not tenants, with companies that were leasing the spaces for them. They got into lawsuits. They also set up to merge with USBTC, which happened obviously this past month here, which was, I think, the best thing for them going forward, because you can see when we look at the numbers, it was just not good for them. But currently, based on the reverse split as part of the merger, they're at, I believe, 88.5 million shares outstanding right now. Market cap is at 1.18, almost 1.2 billion. Their performance here over the last 12 weeks hasn't been that great. It's been good, obviously, but not as great as some of the other miners that we've seen. The current hash rate is at 7.3 exahash. Their future hash rate is at 7.3 exahash, and this is for self-mining. This does not include any of the hosting that they do now as a merged company. Does not include any of the managed services that they also include. This is just for strictly for self-mining here. They do have obviously a huge HODL position, 9,129 Bitcoin. That's valued at 388 million right now. So that's a really good plus for them. They do have cash that they can use if they need to grow or do whatever they need to, or HODL if they want to, whatever it might be. One of the things that kind of irked me with Hut 8 last year was they were pretty much holding everything and diluting shareholders in order to do so. So they were mining Bitcoin, paying the expenses for that, paying expenses for all the overhead, the employees, everything else by diluting shareholders. I was not a fan of that. Okay, BTC mined monthly, you can see here how that has been coming down here every single month for the most part. And then obviously November, merged with USBTC, 390, much better numbers that we're seeing here for them. So this is obviously a good thing for them, in my opinion. BTC HODL also kind of up and down all over the place here. And you can see here that they started selling this year in February, it looks like. If we go far enough back into last year, you'll see that they sold nothing in that year. They were just HODLing everything at that point. Excuse me. And then you can see which months they actually sold. Here, let's take a look at BTC price efficiency. As a result of their operations, they had sites that were down. There were sites that had electricity issues, that had basically, I think, did something to the microcontrollers for the ASICs miners. They were repairing those things, but because of all that, that had a huge impact on their efficiency. They were operating at like 50% of what they really should have been. So that's why their efficiency really took a hit here. In November, it did improve here a little bit here, but not as nice as some of the other miners that we do track. Hash rate, you can see here, hash rate was just flat pretty much all year until November of this year. Monthly BTC revenue as well, pretty much flat, up and down, and then finally a nice increase here for them. So that was good. Hash rate, like I said, flat. How much they sold each month here. And then their revenues over the last couple of quarters has been coming down. This quarter, we're looking at 31 million possibly, and that's with the merger with USBTC. And that's just an estimated number because we don't have the numbers for October numbers for the combined company. So it might be actually higher than that. As for quarters operating costs, have been coming down. We'll have to see, obviously, with the merged company, how that all looks. And that's why I say, once I get more data with the combined company, I can have better numbers. Right now, it's just a best guess estimate, and I'll show you guys what I mean down below here shortly. Okay, cost of mining 1 Bitcoin minus depreciation, 22.2 thousand per coin. Bitcoin mined quarterly has been coming down, like I said, and that's mainly because they were flat. Bitcoin network hash rate was increasing. They were they were flat on their hash rate. So this is what you see when that happens. Debt to equity ratio lower is better, obviously. They are at 0.24. It has been increasing a little bit here, but it's nothing bad. Current ratio higher is better. They're still at 4.6, above 1, so that's fine there. Total current assets, 379 million. Total current liabilities in Canadian, 82.2 million. So healthy balance sheet as ever. So that's all good there. Not a big deal there. So looking at the numbers that I have here for them, and this is where it gets tricky. So majority of the numbers that I have for them is when Hut 8 was by itself, not the combined company. So the only data I have right now is for Hut 8, going back to 3 quarters, and the current quarter is basically going to be a mix of USBTC combined and Hut 8 itself. So the numbers are way off on this one. Right now, based on where they are, so don't look at these numbers over here. Where they are currently at 1334, I think they should be valued higher based on what they are currently mining at 17 or 7 exahash something. With all the other business segments that they do have, I believe that they should be higher from where they are right now. Okay. I just don't know exactly where because I just don't have the data for it. Once I get the data on it, I will point that out to you guys. Going down here, the numbers that we do have here for them are the merge. So we combined all the numbers here to what they reported being. I didn't know what what miners USBTC had by themselves. So these were the numbers that we had here in gray of what Hut 8 has, basically. So you can see they have a lot of older miners here. 77 terahash, 96, 87, 89, 90, 93 terahash miners, 91, 84. I mean, that was just really bad numbers there for them. And I think right now we're looking at, even with all those numbers and the combination of the two companies, it looks like we have that at, right, yep, we're using that number there and that number there, which is the combined company here, what they reported as roughly, and this is an estimate again, we have them at 33 joules per terahash. So they definitely need to upgrade their systems, their fleet, as much as they can going into the halving event. And maybe they will do that. Maybe we'll get a press release from them on it. Going down here, general administrative compensation here was really high. You can see here was 70.35%. Revenue was 16.9 million, and they had 11 million in general and administrative compensation. So that was really bad. That's another reason why I wasn't a big fan of them right there. Diluting the heck out of shareholders and then paying yourselves quite the salaries. Not a fan of that. So that's why the stock was down for the majority of the year, I think. That's just that part of it. Now with them being a merged company, we'll see how those numbers look going forward. Hopefully they improve. But we'll have to see. Right? It's going to take at least a couple quarters for us to get some real good numbers from them. But other than that, the big thing for them is upgrading their fleets, growing their hash rate, which they are going to be growing because they are putting a bid in to get the bankruptcy assets from Validus. That's going through, I believe. We'll see if that passes. If that passes, that's going to be a nice couple of facilities that they're going to get there that can put in miners potentially. And then we also have, now with the combined company, USBTC and Hut 8 now won the Celsius bid to basically manage host their Celsius servers. So that's going to be an added plus there as well. But so they do have a lot of good things going for them. It's just my numbers, like I said, are not the greatest based on the merger. Wish I had better numbers for them. Maybe we'll get some better numbers when they report the yearly results. We'll maybe be able to fine-tune this a little bit better. Okay. Next here, Iris Energy. Iris Energy has 66.7 million shares outstanding. Market cap is at 476 million, $7.15 in change for the stock price. Their performance over the last 12 weeks has been really good here. Their BTC production has also been growing here, but they've been kind of flatlining here a little bit here, and ever since May, been coming down in BTC production. That might be because of their hash rate has been kind of flat there. We'll take a look at it. Hodl, they don't hodl anything. They believe that they're like a gold miner. They basically sell everything that they mine. So I think a hybrid model is more appropriate, especially with Bitcoin, because Bitcoin goes up, 2, 3, 4, 5x in a bull run, whereas gold gone in the last 10, 12 years? It's been pretty flat, right? So it makes more sense for the gold miners to sell than it does for, I think, the Bitcoin miners, especially in opportune times. So that's why I think a hybrid approach is more appropriate than all selling it regardless. So that's just one of the things that I disagree with Iris on that. Looking at their BTC per exahash efficiency, they've been also one of the probably top 5 efficient miners here as far as that is concerned. They sell everything, and then you can see here that their hash rate growth has been kind of slow here ever since April. They got to quite a bit there, and they've been kind of flatlined a little bit here, growing a little bit each month. You can see here 78 petahash, 114 here and there. Bitcoin revenue also peaked in May for them, and then they're getting back up there in November here as well. So that has obviously improved here. Also in 2022, they had these special purpose vehicles for loans on the miners that they had. They had to give those back because those were not cash flow positive. And I believe they're still possibly in a lawsuit with the lender on those at this point, I think. I haven't heard anything about that being settled yet. Correct me if I'm wrong on that. Other than that, BTC's whole value to sell everything. Last 4 quarters revenue has been increasing. Well, it was going down Q4, Q1, Q2, and then the first half of 2023. We're looking, we should probably not include that, but current quarter, we're looking at about 34 million for them. So it's going to be a nice bump in there because their hash rate has definitely grown. Last 4 quarters operating costs have increased as their hash rate has increased as well. So that's fine. Cost to mine 1 Bitcoin minus depreciation was 12.4 thousand in H2. What do I have H2 in here? Oh, that's right, because Iris Energy doesn't report quarterly results. They report biannual results, so every 6 months. So that's why that's coming up as that. So probably in H1 of 2024, that's going to be probably a lot higher here. That's why it's kind of low there right now. Bitcoin mine quarterly, again, we're not getting the real quarterly results because for whatever reason they reported 2 quarterly results here in 2023, but then they decided to go with just the biannual ones. Debt to equity ratio is lower, so that's good. Current ratio is higher, that's good. And then their current assets 89 million, and then 24 million for debt, so that's good there. Based on all those things that we saw here and their current growth going forward, I didn't talk about that, did I? They said that they're going to give to 10 exahash here, currently purchased. They're currently 5.7 exahash. That's why we do them with pretty good growth here. PA 20, $17.62 for the targets to 26.42 there at $7.15. Definitely undervalued in my opinion, but I think them not reporting also the quarterly results is kind of hurting them a little bit. It's not very transparent as far as what the investors are used to with all these miners who are reporting quarterly for them. As far as their miners are concerned here, they're also got some of the, well, I wouldn't say the older miners, but probably the 2022, 2023 generation miners that are 100 terahash. They got some 200 terahash miners and 190 terahash miners as well. So that'll be good going forward there. And we're going to get those in Q1 and Q2 of next year. Once those are all installed, we get into 24.09 joules per terahash, roughly based on my estimates here. So that's going to be pretty good there for them. Looking at their general administrative compensation here, pretty high, 41% again. Right, they've been doing pretty good here. Going back to 2022, they were at 30, but that has been increasing here and kind of going down a little bit now. But still, 41% is way too high for compensation. You know, a normal business, and this goes for anybody, not just Iris. And this is just my little tyrant, or I'm going to go on a little tyrant. Any company that's not publicly traded, they would never be able to go and be like this, right? They wouldn't be in business if they did, right? If you're paying yourself that much, 41% of the revenue, you're going to go out of business eventually, unless you're making, you know, hundreds of millions of dollars per quarter. At that point, maybe you can get away with it, right? Because you have the money beyond that to exist. But other than that, anything like that high, it's just, for normal businesses, that would never work. So I really want to see this come down for all these miners, if they can. I don't know if they can. That's it for Iris. Iris is growing, so that's good there. They did state that they want to get to like 30 some exahash, I think, eventually, like in 2025, 2026. That is definitely an audacious goal for them. They do have facilities that they're building out. But we'll have to see, right? And I think that's it for them. Yeah, we'll leave it at that. Good growth here so far. They need to continue to grow, cut down expenses as best as they can, like all the miners as well. Next, Marathon here. Marathon Digital, 222 million shares outstanding, market cap 5.2 billion right now. Definitely top dog here as far as the miners are concerned. Current hash rate 23, future hash rate is going to be 30. Their performance here over the last 12 weeks has been fabulous. 230% from 12 weeks ago. You guys can look at all those as well. BTC mined, they've been averaging here since July, well, over 1,000 Bitcoin here ever since then. November should be, or December should be a really good month for them as well. They do have the largest hodl position as well at 14,025 Bitcoin, valued at 597 million right now. if Bitcoin goes up just double that, that's going to be valued at double what it is right now. So if Bitcoin goes 3x, we're looking at 1.5 billion just in BTC HODL value by itself. Looking down here, BTC production, like I said, was going up. BTC HODL has also been increasing, which is good. BTC per exahash efficiency, not the most efficient miner here. Sometimes they come pretty close to being in the top 5. Other days, other months, not so much. And that all depends on how much they curtail. BTC sold value, or how many BTCs have been selling. They've also started selling this year as well, which was good because last year they were pretty much hodling everything that they had also. But this year they've been selling. And I believe Fred Thiel stated in an interview someplace that they actually run numbers to what is the most opportune or most ideal way to go about it. And he said like a 50-50 strategy is probably the best one, where you mine 50%, sell it, and hodl the rest. So it does look like they started doing that here. Hash rate has continued to increase here. Last year was a bad year for them. They came down to like 700 petahash at, what was it, like August, I think, of last year. Their Mount Harden facility went down because of thunderstorm. And then ever since then, they started to kind of go do a lot better going forward. But for that period of time when they were using Mount Harden, they had a really tough year in 2022. Excuse me. And as a result of that, with the huge increases that we've seen in hash rate, we're seeing obviously huge increases in revenue as well for them. Okay. Last 4 quarters revenue, you can see how that has been increasing here. We have about 119 million potentially here for this current quarter. Operating costs have also increased as the hash rate has grown because you're paying more for everything else. Cost to mine 1 Bitcoin has come down to 17.18 thousand, which is pretty good. Bitcoin mined quarterly has been increasing. Hash rate has been increasing, so that's all good there. Current ratio or debt to equity ratio is at 0.35, so that's good. Current ratio is at 11.3, so that's good there. Total current assets is at 432 million, that's good. Total current liability is 38 million, that's good there. And I currently have in value between $15.71 and $23.57. They're currently at $23.49. I think they're pretty fairly valued. Obviously, if you, and this does not include HODL. If you include HODL in that, they're probably undervalued based on this. Okay, and that goes for all the miners that have HODL position. You can always up that value here for them. The other thing is, what was it? They are going to be growing to 30 exahash here, and then they have plans to grow to 50 exahash. They bought out 2 facilities from somebody here recently. Can't remember the names, but they do have the option, obviously, to grow there to 50 exahash. So they're actually going to be having their own sites instead of relying on a asset-light approach, which they were doing here for the last couple of years, where they were basically buying miners and sending them to hosting companies to do that for them. I think that's a good thing for them here to diversify in that aspect and also control their costs a little bit more. So that will be good there. The only thing with those facilities that they purchased, they do have hosting customers in there currently. They're going to have to wait until those hosting customers are out of there. They did not provide when those hosting customers will be out of there. Maybe we'll get some data on that as far as when that's going to happen, when that actually finalizes the deal on it. Okay, so that's kind of that part of it. As far as miners concerned, they have very efficient miners here. Our latest generation miners are the XPs here, the 140 terahash miners. And then we have the 100 terahash miners here as well. And then they're saying they're getting some miners here to add an additional 7 exahash, but we just don't know what. So we're waiting on that information as far as what they're getting. And based on what they reported and the number of miners that they're buying, we're estimating 195 terahash miners, something like that. Okay. But that gets them down to 22.48 joules per terahash, which will be really, really good for them. And then we're including all the numbers here as well and getting rid of some of these maybe older miners here as well. Okay. Looking at general administrative compensation here, they're at 20%. So that's actually pretty good because they were up 106% here in Q4 of last year, which was just ridiculous. But that has been coming down here. So that's good there. They're at 20%. And I'm sure that's going to probably even come down more as they generate more. Or actually might go up a little bit because they bought facilities here. They're going to need people in those facilities. So we'll see how that goes. As long as the revenue increases and they increase a little bit of their overhead as well, that should be fine there. So yeah, big thing for them is obviously they've had huge growth here. They're going to obviously generate a heck of a lot of Bitcoin here. So no real qualms from them. I was bashing quite a bit in 2022. This year they've been doing everything right. They don't always win the metrics race here because they do curtail quite a bit. And you can see that here based on the numbers that we have here. In like August, they were operating for 24 days, July 26 days, on average 28 days in September, 29 days in October, 27 days in November calculated, even though we had a bunch of Transaction fees being added to it as well. Those did not get added in here, where we saw that added to the other miners as well. Okay, so overall, they're just operating the way that they should be. Next here, Mawson here really quick, because we're getting on to almost an hour-long video here. Wow. Okay, shares outstanding 16.6 million, stock price $3.20, market cap 53 million. Performance here over the last 12 weeks has been really good. Current hash rate 1.5 exahash, I guess you could say, and then future hash rate maybe 1.8. They don't have a lot of growth left in them. Their BTC production has been increasing, which is kind of good to see, but then obviously dipped again here in October, November. They don't hodl anything right now. BTC per exahash efficiency, pretty low here. Not the best miner when it comes to this stuff. BTC sold. They sell everything. Hash rate, you can see where they're at right now. They're pretty much flat at 1.4. Value revenue-wise, they peaked in August with 2.4 million. They're at 2.3. Looking at the BTC sold, they've been selling everything. The good thing is for self-mining revenue has been increasing here, but they're looking to be about the same as they were in Q3, unless we get much better numbers for December here for them, which will obviously help that out. Last 4 quarters operating costs, pretty flat across the board here, up and down a little bit here, but overall around 11 million or so. Their cost to mine one Bitcoin has been increasing here to 19,000 here at the last quarter. Bitcoin mined has been improving, which is good to see. Their debt to equity ratio has been going up also, which is not good to see. And their current ratio, which you want higher, has been coming down, which is not good to see. So they currently have 13 million in assets. So current liabilities, 46 million. That's not good. That's not healthy. And they have in between $3.22 to $4.84. They're at $3.20. They're undervalued, but there's a reason for it. Lack of growth. They also sold their facility to Cleanspark last year. And they've been trying to get out of debt ever since then. They sold miners as well. We've seen that. So they're in financial trouble right now. Right now might be maybe an opportune time to dilute a little bit. You can say that nicely. And then the miners that they have here also are pretty bad. 90 terahash miners here, 90, 85 terahash miners as well. No real plans for future growth. We still have maybe some miners here that need to get installed here potentially. Or are they pretty much, I think they're pretty much fully installed here. But no, we still have 222 petahash left to possibly install, if those haven't been sold already. That's kind of what we're looking at that. And that gives us to 31.64 joules per terahash. And then their general administrative compensation here, again, really high. 65.89, 65.65%. Way too high based on the revenues that they're generating here. Okay, so not a good sign on all on Mawson here. I would be surprised if they don't get bought out, or they're going to be in really trouble heading into the new year, going into 2024. Okay, next here is going to be, okay, we only have a couple more to go. I think my voice can make it. Riot has 206 million shares outstanding, market cap 3.2 billion roughly, stock price at 15.47. Performance over the last 12 weeks has been okay, has been great, hasn't kept up with some of the other miners as well. Current hash rate 12.4 exahash, future hash rate 38.4. I think some of the concern there with them is dilution. How much are they going to have to dilute to grow to 38 or 37, 38 exahash from the 12.4 that they are currently? BTC HODL is also, I think, third best here out of all the miners that I track. That's 7,358 with 313 million in value of that. BTC production, you can see here, has been going up and down. They've been going up here recently, which is good to see. They curtail also a lot, and they also sometimes get pretty good power credits for that. I think in August, September, they got like 30 some odd million for that, but it doesn't happen every single time. So it's kind of hit or miss there. And then depending on when they apply it, we don't know that. So also have to take that into account. BTC HODL has been growing here, which is good to see. BTC per exahash efficiency has not been the greatest because they curtail quite a bit. BTC sold, how much is sold, and you can see their hash rate growth from 7.7 exahash to 12.2. That's, what is that going to be, about 50% growth there, something like that? Not roughly, somewhere around there. I'm just doing the math in my head here. And then the revenue side of things, you can see here that they peaked prior in May. They came way down here in August, September, and then finally starting to go back up here as Bitcoin prices have been going up and Bitcoin transaction fees and all that has been helping out here. Revenue, kind of up and down all over the place. Q4 of 2022, 30 million. Q1 of this year, 48 million. Q2, 49 million. And they're down in Q3 to 31 million. So go figure. We're estimating about 53 million right now, but we'll see if we get that high. Last 4 quarters operating costs have been kind of coming back up. Then cost of mine minus 1 Bitcoin minus depreciation, 20,000 here at Q3. Bitcoin mine quarterly up and down, but it's been coming down here because they've been kind of flat as far as growth has been concerned here over the last couple quarters. And they also had problems with one of their facilities which got damaged from the winter freeze. This was their immersion cooling facility. They got damaged. They had to wait and get parts in from England. That took forever for them to do that. Let's see here. What else we here? Oh yeah. So that higher better total current assets. Let me see. Debt to equity 0.05. Current ratio 7.29. So that's good. Total current assets 513 million on the balance sheet. Total current liabilities 771 million. Sorry. So healthy balance sheet there. I have them between $8.83 to $13.24. I think they're a little bit overvalued based on this, but that's not accounting for their HODL position or the credits they get for their production as well, because we just don't know which month they're applying those credits to. So it makes it a little bit more tricky, a little bit more difficult. But based on all of this, I think they're probably pretty fairly valued right now. Right. Okay, going down here. Miners, they have some older miners as well. They got these 90 terahash miners here, 110. These 90 terahash miners, 140 here. Then they started purchasing some of these newer ones, 220, 280, 230, 250, 280. And they're getting a lot of these guys. These are all the micro BTs. A lot of these are supposed to be completed not until the second half of 2025. They're building out the facility in Corsicana, I believe, or the Corsicana facility, that's what's called. But that will get them down to, if they can get to all that stuff, but the growth is still far a ways out. It's going to get them to 22.56 joules per terahash, which is pretty good. And then they have the option to buy more to get to 100 exahash in size, which is just ridiculous. That's probably looking towards probably the next halving event potentially when we do that. But we'll see when that happens. As far as their general administrative compensation here, for some reason in Q3 they were up 56% compared to only 25% here the prior quarter and 17% in the. So I wonder if they dump some stuff in here as far as bonuses or anything like that. But yeah, that's definitely way too high for me there. Okay. Other than that, they've been doing pretty well. Growing is a big thing for them. They've had some issues with facilities. They've been working on them to get those fixed. Hopefully they can keep those operating and going forward. But other than that, we'll have to see, right? So no qualms on that one. Next is Sphere 3D. Sphere 3D is one of the smaller ones that we cover here. They're currently, they have 14.3 million shares outstanding. Stock price at $3.32. Market cap here is 47 million. Performance here has been pretty good here over the last 12 weeks. You can see that. Their current hash rate 1.3, future hash rate 1.8. They still have a little bit of hash rate growth. Their BTC production has been increasing here, but it's been kind of up and down here depending on when they install miners. The hash rate just stays flat. You'll see numbers, miners, BTC mined going down. And when they install miners again, those go up a little bit here. Then let me see, HODL position, 18 BTC right now, so not a lot, 770,000 value as it is right now. See, BTC per exahash efficiency, also not very efficient. They do curtail quite a bit as well. And they also have a lot of their machines hosted as well, or majority of them, I think, are hosted, if not all. BTC HODL can up and down. They definitely were selling quite a bit there. And then let's take a look at their hash rate. You can see their hash rate was kind of flat for like 4 months there, flat for 2 months, a little bit of an increase, and then flat for 4 months again. So that's the reason why we're seeing the BTC production coming down. BTC mined revenue also been going up and then down and then back up a little bit here. So they reached a new high here at 2.6 million here in November. Hash rate difference month over month. BTC sold values. You can see how much they're selling. You can see that some months they are selling more than they mined here. Last 4 quarters revenue has been increasing, which is good to see. Current quarter we're estimating 6.6 million. Last 4 quarter operating costs has been increasing also. And that's mainly because they've been installing machines. So custom mine 1 Bitcoin minus depreciation 23,000 right now. Bitcoin mine quarterly has been increasing as well, so that's good there. Debt to equity lower is better. They're at 0.35, which is good, and then the current ratio is 0.78, so that's still not too good there. Based on those numbers that we see here. Let's see here. Okay, stock wise, they're having between $3.35 to $5.02. They're currently at $3.32. I think they're undervalued, but there's a reason for it, and that's mainly because, well, a little bit more debt than they have assets on right now, and the growth here, cost to mine Bitcoin also as part of it. And then let's take a look at the miners that they have here. They have a bunch of these 100 terahash miners here, which gets them to about 29 joules per terahash efficiency right now, and not a lot of growth planned either. So really nothing here. Going down here to general administrative, we can see here that's 65%. So that's kind of also a bummer here for me on that one. Okay, other than that, like I said, it's one of the smaller miners here. We'll see if they can survive it. They're going to get cut in half, obviously, when the halving happens here in April of this year, or 2024. Wow, I'm thinking of already this year. But yeah, we'll see what happens if they get bought out or if they're going to dilute shares and maybe grow that way, potentially. Don't know. Okay. But we'll see on that one. Next, we got Stronghold here. Stronghold has 7.9 million shares outstanding. Could be up higher depending on which shares you count, whether it's C shares, B shares, Z shares. Stuff always makes me mad or crazy. Can't figure this stuff out. But I have a market cap of 58 million for them. Stock price at $7.03. Performance here over the last 12 weeks has been pretty good. Current hash rate 4 exahash. Future hash rate, they're pretty much there right now. Pretty close to it. They had all 50 last report here that I could find. And then the BTC production here has been kind of up and down, but it's been coming down. Also, we don't have any data for them for like a lot of 2022 and part of 2023. And the reason is they got into trouble also. They had to return miners. And then I guess the one thing that companies do is when they get into trouble is they don't provide any production updates monthly. So this is the last chance they have with me here. If they stop providing production updates again, they're going to be out forever. I'm not going to track them because it's just too hard. So this is kind of what we have right now. For them, you can see their BTC per exahash efficiency, also not that great compared to some other miners. BTC sold. They've been selling a lot of it as well. Hash rate, you can see here, they were pretty much flat based on what I could figure out on the data that I had. And then they improved a little bit here to 4 exahash and then flat. And then their revenue here side of things, you can see that they've been coming up, down, and back up to 7 million. So that's good at least. How much they've been selling. And then the last 4 quarters revenue, self-mining, you can see how that's been kind of flat here around 17, 18 million. They had a pretty good quarter in Q4 of last year, 29 million, but they're possibly going to be back up to about 18.9, maybe 19 million in this current quarter that we're in. Last 4 quarters operating costs, self-mining minus depreciation. Also kind of up and down depending on the season, it seems like. Q4 was up, Q1 was down, Q2 was up, Q3 was down. So Q4 is usually like the winter along with, yeah, it seems like during the winter, like the winter, fall, spring area, they pay more, it seems like. Or Q2 is actually the summer. So winter more, summer more. Okay. Looking at their cost of buying Bitcoin, 25,000 based on what I could figure. Bitcoin mine quarterly includes hosting, 620, 626, 620. That's what's being reported there. Debt to equity, lower is better. They're at 1.37. Current ratio higher is better. They're at 0.43. So not a pretty healthy balance sheet there. 12.3 in assets and 28.2 million in total current liabilities. Okay, based on all of this, I have them at $20.78 to $31.18. They're at $7.30. There's a reason for this, right? Their balance sheet here isn't that healthy. They also stopped reporting numbers for a while. And then when we look at the miners that they do have here, they're not too bad. They're 100 terahash, 119, 130, 130. They're supposed to get in. That we have calculated here, but look at their general administrative compensation here, 50% also, right? And then when you actually look at the numbers here for their revenue side of things and costs, if you include costs here, if you include fuel, operating, maintenance, and general administrative costs, you're at 22 million right there. And their revenue was only total, let me see here, revenues, total operating revenues was 17 million, right? 22 million expenses, 17 million in revenue. That's not going to work. Cash flow wise, that's not working. So that's part of the reason I think they are down, the reason why they are down. Okay. So that's what it is for them. The big thing for them is getting their costs under control, getting debt under control, growing if they can grow. And then the other thing that they have obviously an opportunity with is the carbon capture. That's going to be interesting for them also. We'll see how that works out for them going forward. So once we have some good numbers on that, that might obviously offset the stock here a little bit. But right now, I understand why the stock is at where it's at and why I have it at here, right? If everything was great, cash balance was great, they were increasing their hash rate, all that stuff, costs were under control, I could have easily see them around here, but they are where they are right now because of some things. Okay, finally, the last one here, it's going to be Terawulf here. So Terawulf has 238 million shares outstanding. Market cap at 571 million right now. They've had pretty good growth here over the last 12 weeks, like a lot of miners have. Some miners have done better. Their BTC, they don't have anything hodl. They sell everything here. Their current hash rate at 5 exahash. They're supposed to get to about 7.9 exahash right now. That's been purchased. They just provided information that they got there this week. They said that that's fully funded here, and they're also switching from a hosting to own mechanism with Bitcoin, not Bitcoin, Bitmain, to their own self-mining there. So that's a good thing that they just did. I just did a video on that earlier this week. You can check it out there. But their BTC production here has been increasing here, 13 throughout the year, basically, but then it's been kind of falling down as they've pretty much reached their hash rate of 5 exahash. That's been kind of flat here for a while, so that's been coming down. Okay, BTC per exahash efficiency, also pretty efficient as far as the miners here. Pretty good there. BTC sold, they sell everything. And you can see here, as I said, hash rate has a huge growth here in early 2023, and then they've been kind of, ever since the middle of the year, flatlined. That's why we're seeing the BTC production going down, okay? BTC mined revenue has been increasing as well, which is good to see. Bitcoin price has been going up, plus we're getting the Bitcoin transaction fees in there as well. You can see the hash rate growth that we saw here, month over month. And then I should have, I got October in here, need to update that. BTC sold value here, what they were selling, and then their revenue has been increasing as well, which looks like it's going to continue to increase as well in this current quarter. Last quarter operating cost minus depreciation was coming down, but they increased it here in Q3, and that's mainly because, I don't know, I'm thinking maybe electricity costs maybe a little bit, because I see that they're pretty much flat on the hash rate side of things. Cost to mine 1 Bitcoin minus depreciation, 13.5 thousand based on my numbers. Bitcoin mined quarterly has been increasing. We were down a little bit in Q3. Debt to equity ratio, they're at 1 here. Obviously, we want to be below 1. Current ratio, higher is better. They're at 0.1197, so that's not good. All right, total current assets, 12.9 million. Their current liabilities, 108 million. So that's bad. That's bad there. Based on all of this, my numbers here for the last 3 quarters plus the current quarter, we're in at $4.06 to $6.10. They're currently at $2.40. There's a reason for it. There's that reason right there. It is staring in the face why they are down because of that. There's just concern that how are they going to pay for this, whether it's going to be dilution or anything like that. I think that's what's keeping the stock down. The growth here is nice to see that they're going to be growing. Their miners are also pretty efficient here. They do have some 100 terahash miners here, 140 terahash miners as well, which is good. And they're getting some 151 terahash miners as well. So that'll get them to about 24.7 joules per terahash, which includes all of these. Oh, and we're actually getting rid of some of these older miners here, potentially, which they stated that they would, based on what they're getting. Okay, now looking at their general administrative compensation here, 36.8, so still above 20, still high. I'd like to see that come down lower for them as well. And the big thing is continue to grow for them, pay off the debt. I don't know how they're going to do the debt. Maybe they're going to dilute, and that would be really my recommendation here. Is the stock was much better yesterday, so if you diluted, 30 million shares roughly at $3 or something like that, where the stock was, you could have paid off pretty much all your debt here, and for that, it would have been a dilution of 30 million shares, which they currently have 238. So you would have been on 268 million shares, but you would have been out of debt and probably better off for the long run. But that's just my thinking on that. So that is all of it. Wow, that was a lot. That was long. Like I said, a lot of these miners here have done a great job growing in 2023. Some not so much. Some have, had issues with debt and other things and legal things. Wow, I'm losing my voice. But I think going forward, some of these might be in trouble going to the halving event. Don't know. We kind of looked at the ones that might be in trouble. We don't know if they're going to be in trouble really, right? They have the option to sell shares and dilute if need be to save themselves. We also have the possibility of them being bought out as well. So we'll have to see how those go forward. But obviously the ones that are growing into 2024, into the halving, after the halving event, I think those are going to be the ones to really watch out for, right? Going into that year, especially as Bitcoin gets into the bull run. We got this Bitcoin spot ETF happening as well here, possibly in January. That's going to push things forward maybe a little bit. And then the halving event itself, after the halving event, Bitcoin usually goes up because the supply is cut in half, right? So supply and demand economics on that side of things. It's going to be definitely a fun 2024. We had a fun 2023 with obviously things going up quite nicely here on the stock prices and everything else. So I'm looking forward to it. I hope you guys are too. It's going to be a bumpy ride. It's never going to be smooth sailing for us, but it's definitely going to be worth it in the long run, I think. So I appreciate everybody that's been joining here recently, joining the channel. I know obviously with miners pumping up, it's obviously helping. So I do appreciate you guys joining in. Hopefully you guys learned something from this. And as always, please do your own research on all this stuff. This is just data that I collect from all the miners. Run the metrics on it. I could make a mistake. If I make a mistake, let me know on it and we will get corrected. Okay, so that's it. Obviously, we got the New Year's celebrations happening here. I'll do a video probably either tomorrow or Sunday, and I probably won't do anything on Monday. It's going to be New Year's Day. And we'll get back into the swing of things on Tuesday when the markets open back up. Okay, so I'll see you guys later. Thank you so much. Also, spreadsheets are available to my Patreon members as always. We got 50 spots left, I think, in Patreon. When I checked earlier for the $5 price. After that, it's going to go up, and we'll do another batch of 200 probably at that point. at another price tag. So if you want to get in early, so that people that got in really early are paying only $4 a month, and then we're jacking the prices up as time goes on. So that's it. Thank you so much. I'll see you guys in the next one. Until then, bye.